Forex Indicators Lesson 6, Forex Average Directional Index, ADX. The Average Directional Index, or ADX, is an indicator of directional movement, and it's used to measure the strength and direction of a trend. It consists of four main components: the ADX line, the positive DI line, the negative DI line, and the 20 level. Let's take a look at how to use this in your trading. First of all, ADX is great to determine if the pair is in a range or in a trend. ADX line values below the 20 level suggest that the price is in a range. When the ADX rises above the 20 level, it shows that the trend may be starting. So when the ADX is below 20, you can trade range opportunities. You can use indicators like stochastic to look for overbought and oversold readings to decide your entries and exits. If the ADX rises above the 20 level, it indicates an end to the consolidation period, and there are high chances of a breakout. You will then have to follow other strategies, such as positive DI and negative DI lines, for knowing the direction of the trend. So if a positive DI line is on the top, it suggests that the price is trending upward, and if the negative DI line is on the top, it indicates that the price is trending downwards. Another important thing to consider about the positive and negative DI lines is the height of the peaks after crossovers. Let me explain. You can see here that the positive DI line has been on top for some time, which suggests an uptrend. When the negative DI line crossed over, we measured the height of its peak. If a peak is lower than the positive DI's last peak, it shows that the recent price action has been just a retracement, and we should still be looking for buying opportunities. However, if the negative DI peak after the crossover is higher than the positive DI's latest peak, it signals that the trend may be changing, and we should start looking at either closing our long positions or looking at selling opportunities.